Some wild swings in the energy market today. Check out nat gas, a commodity pulling back in a big way today following a huge run up. Let's get to Brian Sullivan with more on what's driving this action. Brian.
Melissa, well, what's not driving the action is probably a better question. All right, a wild day for nat gas here, but particularly in Europe. Prices did pull back. As you said, we'll call that the Putin put, if you will. He's talking about adding supplies and all nicey nice about the Nord Stream 2. Really, this is a political play for him to just get the Nord Stream approved. But let's take it easy. Natural gas prices still well above prices of just, 2 weeks ago. Oil here closing in on $80, above that in Europe. And now the Biden administration talking about a ban on crude oil exports. So all that, we are in a very good place compared to the rest of the world. Let us go global. It's almost like a worldwide exchange. Anyway, in Europe, nat gas surging today to new records. It was at 400 pence per unit. Where's Wilfred Frost? What does that mean? All right, it usually is around 50 pence, so about 500% above normal in UK. Coal prices, yes, coal, soaring, nearly doubling in the last few weeks. That is causing wholesale electricity prices to jump 400 or 500% right now across much of Europe. It's all happening for a few reasons. Number one, big boom in demand coming out of COVID. Two, wind power hasn't been generating what was expected. They need the electricity from somewhere. And three, the UK, just being the UK, has very little natural gas storage. They rely on buying a lot on the spot market. You've also got energy chaos in Asia. China paying 25 or 30 bucks for LNG right now. It's normally about 10 to 12 there. And now there's talk, guys, they may convert some natural gas or coal power plants to oil. Aramco, CEO yesterday saying that could happen and boost oil demand by 500,000 barrels a day if it does, which I don't need to tell you because it's, math, would eat all of OPEC's supply increase that they just put on the market the other day. From a natural gas stock perspective, these names have been on fuego. Antero Resources, EQT, Tellurian, Cheniere, they're up 60, 100, and 200% this year. And you guys can talk about whether or not they're played out. But I'll add one more thing, right? The Guy Adami. And one more thing. Since natural gas prices are used by so many industrial companies like chemicals or whatever, also look at things like fertilizer makers like CF and Mosaic because they may be able to profit off of natural gas arbitrage. We get the gas relatively cheap. In Europe, it's soaring. Anybody that plays that difference, whatever the industry, might be a big thing. And by the way, if it spikes chemical fertilizer prices, that's a food inflation story as well. So that's a lot of stuff I just threw out you. It's kind of a word salad. I hope it made some sense.
It was a delicious, chopped variety, Brian. But I do have a question in terms of, part of this speaks to underinvestments, perhaps over the years, in natural gas to this point. And I'm wondering, even if let's say the UK invest in storage, et cetera, it could take a while for this all to iron out, the supply issue, no?
Yeah, it certainly could. And Brexit plays a role in this as well, too, because the UK gets a lot of its electricity from France. France is threatening to withhold or pull back on or even cut off electricity supplies to the UK because there's some dispute over fishing rights in the English Channel. I mean, literally, you can't make this up. It's like 1767 all over again. UK wants to go all green, which is great. Renewables are fantastic. But windmills only generate power if the wind is blowing. And that has been hurting. The fact that there's a race for coal. Guys, the price of coal has nearly doubled in 3 weeks. And I'll say this, the best performing commodity this year is coal. It's up 170 or 180%. It's insane.
Brian, it's always great to see you. We'll see you tomorrow morning on Worldwide Exchange.
Yeah, like 2 hours. Thanks.
Brian Sullivan, maybe 4. Guy Adami, what do you think? How do you play this energy quagmire that we've got?
Well, it's a great job by Brian. When the fate of Europe literally is in the hands of Vladimir Putin, that's problematic. I think we would all agree on that. That's nonpartisan stuff there. And it's quite frankly probably the truth. The prices he described, he's not making it up. That's what's going on. We've actually talked about nat gas. You brought up Phil Cheniere a couple weeks ago. We waxed poetic about that. How do you play it? Well, some of these names are volatile. Tellurian, for example, that stock moves percentage points a day. But Southwest Energy, SWN, a pretty interesting place. You mentioned Cheniere. We'll talk about that. But this is real. Obviously came off today, but this nat gas story is not over. And oh, by the way, Brian said it. It all comes back down to inflation. And if you don't think that's inflationary, and if you think somehow magically it's going to sort itself out, it ain't.
Grasso, I feel like Tellurian is a name you might be in.
I'm actually not in that name, but when you look at, it's an interesting point though, when you look at a stock like Antero, AR is the ticker, or a stock like Range Resources, those stocks are up 265%, 235% respectively. So some of them hedge, some of them don't. The first one doesn't hedge, Range does hedge. So my point in all this is it's very difficult to understand the granularity of buying a nat gas stock. I would say that the nat gas commodity is dependent on whether we're going to have a cold winter or a warmer winter. So all this wrapped up in a nutshell, I'd rather be a buyer of large integrated names. ExxonMobil's up 46% year to date, benefiting from the switch from growth into value. And then I have to know all of the granularity involved around investing in nat gas. It's just too difficult.
Why not coal? I feel like this is fast money circa, 2009 when we were talking about Peabody and Consol Energy, et cetera, Tim. They've had monster runs, though.
Well, it could be Gazprom 20 years ago was the best trade in any market, and this is, the company at the center of this. I agree. Coal prices are a harbinger for higher oil prices, and I think they're going higher. This is greenflation. We've talked about inflation. We've talked about, decades of low capex. This is greenflation, and there's a lot of different factors that make that up.